Hey guys, Freaky Finance here. Last week we looked at Power Corp, Canadian kind of financial conglomerate with pretty much half the business insurance and the other half asset management and assets under administration, with some important fintech accelerators. But anyway, this week we're going to look at DarioHealth, which is really, it's like a tech and a healthcare play in one. Specifically tech and healthcare. You're also getting quite a lot of traction lately, and a part of that I think is just how the future is going to slowly unfold. So what exactly is DarioHealth? Really, traditional Dario focused on diabetes and then hypertension. Those are the two indications. Now they recently made an acquisition that I'll go into as well, so then they'll have three basic indications. And really what it does is it kind of, a lot of these companies will say they offer personalized solutions that combine something with something else. So like analytics, your AI, and your hardware and your software all together. It's usually the gist of it. Make people healthier really is the main goal. And for people to proactively manage their indications, right? So if you have diabetes, this tool would help you manage your diabetes. And so you'd have less complications and less actual healthcare burden on the system as well. That's kind of the idea behind it. If you're healthier, then you're not going to be as a burden on the system, right? That makes sense logically. Now every company is kind of going to say what they make, why they're different. I'm going to go through my take on why they're different. Basically, they're saying when you're self-monitoring, you want accurate, you want real time, you want personal customized information, and that adapts with your daily life, right? Who you are today is not going to necessarily be who you are a year from now, right? Or even 6 months from now. So anyway, that's their little spiel. This tells me more of like what Dario really is, and how like if you actually want to see like the decision to eat that apple versus that Easter chocolate bunny, how that's going to affect your glucose, right? You can see this, well, it says in real time, so I imagine I haven't used this. I don't have diabetes or hypertension or anything like that, but you could probably see in real time what's going on, what the advantages or disadvantages are. But yeah, I think that would be pretty cool. But the main thing I'm looking at from investing hat on, so really a healthier workforce is a better workforce. You'll find that both in terms of physical and mental healthcare providers. I think that's going to be good for patient compliance. So like one of the things you want to look for is with a product like this is do the people that actually use it stay using it, or do they just use it and drop it? Like there's no like driver or willpower behind it to stay on track. Just think of that. I just think of that like a weight loss program. That would like say like when you're growing up, when you're say I'm a little bit younger, but when my parents were growing up, right? They're always on those weight loss plans. They never stuck to them. They always came back on, right? So that kind of thinking. So this basically is trying to coach them, and healthcare providers would like that, right? And it helps engage with patients to offer right treatment at the right time. They can see the data as well, right? They can see, okay, you're doing something on Saturday at 8 p.m. I don't know if that regimental with people, but I know my life is pretty regimental, so it's probably what doctors would pick up. You're doing something weird. Okay, you're going for drinks at 8 p.m. and I can see it in your blood pressure or something. I don't know. But it's kind of that thought process behind it. And then health plans seeking better patient outcomes and lower costs. And that just makes sense, right? You want to, if there's some condition, especially diabetes and hypertension, which link to other things, right? You got to remember a lot of these things correlate with each other. It just helps reduce risk, especially those material adverse risks, so like the emergency room visits and stuff like that. And basically, if you just take preventive healthcare management, just by like proactively managing your life, right, and just be healthier in general, you're going to be less of a burden for health plans as well, right? Who have to pay out those costs because they're insured, right? Like say my $30 a month or whatever the premium is, or $70 a month. The health plan company, because you gotta remember from Dario's perspective, they're selling these plans to the healthcare people. The healthcare plans will pay like $70 per person, but as long as that's better than X amount of people actually going into emergency room visits due to diabetes or hypertension, they're gonna choose the Dario plan, right? That's the idea. Net, it saves them money, and it also really proactively helps the patient, which is the ultimate goal of healthcare. So what I like here is that they take these users and all these data points right here, they link it to Dario itself, and it kind of like AI, it feeds on itself. So every data point that's collected directly from the clients feeds into the system and makes the system stronger. And one of the things that I liked about Dario is that they focused on direct to consumer first. So instead of going to businesses, like say on a business that employs a bunch of people, they went straight to people. And when you do that, you get feedback a lot quicker, right? And in real time. That constantly keeps retraining the AI system to get better and better and better, right? And this is their tool. So when you see hardware, what does that mean? When you see software, what does that mean? This is what it means. And you can see it's fairly easy to understand. The UI looks pretty good on here anyway. But again, I haven't used the tool. And again, you're trying to get, is this going to be sticky, right? When the person goes on it, are they going to stay with it? Are they able to get the behavioral change, right? Habits are hard to break. But when you get this feedback saying you did this and you see what the reaction is, so if you did something good and you see a favorable reaction, right, you got to get this constant reinforcement, either whether it's positive or negative, on what's working and what's not. And I think that's very important here, especially as the AI adapts to you, right, and your schedule and your routine. I think it's going to be very cool. And that's just that's not specific to Dario. Well, in this case it is because they have AI, but just in general for the healthcare space, I think that's going to be very cool for people to better help themselves. And this slide is actually one of the most important ones to me, is this NPS score and the App Store score, but NPS for healthcare, it's usually they don't score very high, right? Most people are like, okay, it's a crappy tool, it doesn't stick, I quit, whatever, right? But this one, 77, is good. Very good. And they're able to show long-term results, right? 11 clinical studies comprising more and sample size of 40,000. So that's nice. So one of the reasons why I'm looking at it today is that they've recently started to sign contracts. Now this company is very early on, and you're going to see that when we go through the numbers that, like, if you were backwards looking, it would make no sense to buy in at this point. So you have to try, again, this is not like a power financial one where we can see the results so we know it's 10 times PE or whatever, right? With the 5.4 dividend yield and a 27% discount. This is a totally different investment, right? So you have to totally think, what is this going to look like in the future? This is a growth company, and it's just starting its trajectory higher based on recent information, right? So that's the angle here. You can see they're targeting employers, health plans, and providers. Importantly here, you see they have 500 million in pipeline. They recently, on the last quarter, they raised it to 600 million. You'll see that when we go through the transcript real quick. The pipeline is big for this company because the company is very small currently, but the extra signed contracts, 2 are NDAs and 2 are Fortune 500s. One's tech, so in my mind, because tech has a low number of employees, usually it's not as sexy as, say, like a big, huge bank or something like that, right? That has a lot of employees, or say a Walmart, which has like, I don't know, 1.5 million employees in America or something like that, right? Still a good trend. If people are starting to buy in, the people that actually matter, not me, then it should tell you something, right? This could be a trend. So they did increase their indications by buying Upright. And if you're familiar with this space at all, you know Hinge had like a $3 billion valuation. They got Upright pretty cheap. It does, like they say right here, it complements diabetes and aligns well. So they're gonna put this into the existing DRIO platform. So you have 3 different indications now. And just more indication usually means higher cross-selling prices for healthcare plans and stuff like that. You can see here, like I said, they tend to correlate if you have diabetes. Upright as well when they acquire them, or high ratings. That's what you want to see. Do people actually want to use the product, right? And you get an actual word of mouth out of that, or at least Upright has for sure. I think they had 90,000 users when they were acquired. Quite a bit anyway. So you can see the roadmap in diabetes and hypertension. They just added musculoskeletal. So it's kind of their game plan. Try to get as much as the market as they can, right? Through their existing software development and their hardware. And the more of this, the more scale, really. That's what it comes down to. More people will be interested in your product, more plans, more employers. Though diabetes is big, right? Especially in America. And if the COVID indications of people gaining a pound or 2 a month in COVID, right? It's only gotten a little bit worse, I think. And I think the pandemic will put healthcare in mind for people. So hopefully after the pandemic, they'll be more focused on being healthy in general. But that's just conjecture. Like I said, it is scalable. But what that means, you can see here, consumer retail standard, $25 per member per month. Whereas digital therapeutic, you're getting $60 per member per month. And then they add basically $10 every extra condition this thing can do, right? Again, that's just the cross-selling ability and the scale of the product. So eventually, what I imagine is going to happen is there's going to be a big consolidation in the space as a company or 3 companies try to get as many indications as they can and get that product into as many healthcare providers as they can, or employers as they can, right? That's kind of how I would think of this in the long run. And Dario's pretty small, so I would imagine they would probably be a takeout candidate. But that would be my thinking. Primarily software play. It scales very easy, right? The more people you have on it, the better this company's financials are going to look, and that's really the gist of it. And the financial position of the company changes very quickly if they can get those type of contracts with big employers or big healthcare providers. So financial highlights: the average revenue per user increased from 6 to 25. So that's good. The value proposition is working. I found this interesting that they actually wrote this down, expected to grow to 70 per member per month. So that's a big increase, right? Going from 6 to 70 per user. At the same time, they're increasing the number of users. So that looks good. Software as a service, it always looks good if it can scale. And they have this transformation has been, I want to say, 3 quarters, it looks like, maybe even a full year now, that they've started this B2B2C, so business to consumer. And before, like I said, they started business just themselves to the consumer to get that feedback, train the AI, and that's going to continue. But now the focus has shifted to the business, because that's where the money is, right? You want to go to the consumer first to ensure that you have the best product you can have, and then once you have that trained, you need to start going to market to scale, right? So the financials don't look good. So I didn't type these out on Excel or anything like that because there's no real point, because you're not buying this company for yesterday. You're buying this if you buy into those presentation slides, right? Or this transcript that I'm about to show you after this. But you can see revenue, say this is a $400 million company. Revenue is only $8 million a year. So you're buying quite the premium to old revenue numbers. So really, you're not getting anything here. It's a lost position, so obviously going concern would be on this if they don't actually sign contracts, right, and show the scale that they need to. So here you can see interesting. So SGA is probably the most interesting line, and you can see that it was going like 4 million, 5 million, 4 million, 3 million, 4 million, and then all of a sudden you see it go 9, 4, 6, 8. So fairly big increases in SGA, and obviously when revenue is not keeping track with that, you get a little bit angst, right? But in my case, because I'm looking and I just bought into this position 21, pretty much 2103. I do own this one. But my thinking on why I own it, and this is going to be backwards, say from like most of the other videos that actually have businesses that are established. This one is really on the uptick. It almost feels like a little bit of a venture capital in a way, but they already have a real product, right? They just haven't got it to scale yet. So here you can see SGA shoot up like that, right? And that tells me they increased hiring and they've started this transformation to B2B, right? That's what this tells me. Or it could just mean they're wasting money. One of the two, right? But I'm pretty sure it's the later, because they can't make $2 million a quarter and spend $8 million in SGA, right? That's not sustainable. So they're ramping up ahead of time. I think this is to mainly to land the contracts, right? You're probably hired a bunch of sales reps to get out there and get this thing out now that you have a product and you know it works and you're confident in it, right? So I think this financial profile is going to change, or at least that's why I'm in it, right? Obviously it's riskier because anything could happen, right? This thing, if it doesn't even take off, you're gonna lose money. So anyway, the CEO in the transcript basically says 2020 transformational, blah blah blah. We started the year with only 6 employees that were operating in the US, and now we're close to 30. That's why you saw the SGA increase, right? They've already started hiring ahead of this thing to push this B2B out, right? And they've started to get contracts, so results. So yeah, we signed 8 different agreements on the year. With last 3 months, we won 2 big Fortune 500 employers, so not disclose them. They're big, supposedly. This was interesting because the pipeline, because 500 million was on the slides, but 600 million is now what they're saying the pipeline is. And then right here, basically, Rick says we expect somewhere between 10% and 20% of our pipeline to close in a given year. If you take that quite literally, he just said he expects $600 million pipeline to close at least 60 million of it. That's literally what that means, right? And at the high end, 120 million of it. And if that's true, then this financial picture changes, because I just told you that they only made $8 million revenue for the whole year of 2020. And now he's saying, oh, we could maybe even have 60 to 120 million, right? In a given year. And I'm like, okay, so that's exponential growth, right? And you've already hired some people. Like if you're obviously that successful, then you're going to hire more. But you already hired some people to start these sales, get these contracts out, and push the product. I mean, if that's true, then that's why I bought in, obviously, right? If you're going from 8 million to 60 or 8 million to 120 million in a year, that's a lot of year-over-year growth comps. And that's what I'm thinking. So I thought that was very interesting. Now, I can't hold him to it. Maybe he means in a given year and they're not going to close any this year, and they might close 10 next year. Right? And then I'm kind of like, okay, I'm just sitting, holding around for a year. But that's the risk you take. So again, they mentioned the 3 channels for employers. They're starting to see the sales cycle for self-insured employers that are on that annual cycle. But again, these will be lagged. So really, if they sign anything, you're not going to really see anything till first quarter 2022. And today is April 11th, 2021. For health plans, we're continuing to rapidly grow the pipeline of opportunities, and they have a handful of plans that are late stage contracting, and they say they anticipate closing many of these contracts over the next few months, and that should show up in the back half of 2021. So I thought that was interesting. Obviously, I haven't seen anything yet that would suggest they've closed anything too dramatic, and they haven't really given real revenue guidance, just the pipeline closing number. And for remote patient monitor, so that's the third one. But yeah, they have several agreements that are in contracting and believe RPM will continue to contribute significant revenue in 2021. So across the 3 lines, it looks pretty good. It looks a little bit back half heavy, so Q3, Q4 2021. But we should start seeing, like I said, today's April 11th, so Q1's closed now. So we should see Q1 numbers and see if there's any uptick at all, because I did sign some contracts at the very beginning of 2021. Which is one of the reasons, again, why I got in, because I could see, okay, they are starting to execute. They're not just saying they have a big pipeline or a big TAM. They are starting to get contracts, and that's where you kind of want to get in, right? So I need people that are experts to believe in this product to actually sign up all their members or all their employees, right? And this analyst asked the cadence of revenue, so I thought that was good. Basically, the CEO says, yeah, we put all the foundation we made with the B2C, we put it into our B2B. He did want to make a point that their B2C, so directly to consumer, is still going to be there, because that's how they keep, really, that's in my mind, that's how they keep staying sharp. You get that constant customer feedback directly on what works, what doesn't, and the AI self-training tool just keeps getting better. So I thought that was important. He did say that's growing at single digit. That's not exciting for this investment. At $8 million for revenue and $400 million in equity market cap, you're not really interested in that. You're interested in this kind of hockey stick growth if they can attract a big business into it. Yeah, for his revenue cadence for the B2B, you can see we're going to see the revenue coming from employers. Like in this quarter, we already signed in, and it's starting to get into implementation. So that's something we'll see in Q1. So we're going to see what Q1 really was, because Q1's ended now. So the next numbers will be interesting to see some of these employer contracts and how it starts shifting the income statement, and then more intensely in Q2. And then he says in this back half of the year, which kind of reiterates the other guy's comments, that we're going to see a bigger impact that will come from health plans, because they believe that they will have some plans. And then the more we go into the year, the more intensive the growth is going to happen in terms of absolute numbers. And then he reiterates, we're going to start and see significant revenue already in this quarter, so Q1. So we'll see what significant means to him. But to me, if you can actually close 10% of your pipeline, and your pipeline is $600 million, then that's $60 million. And you only did 8 last year, right? So it's like, okay, we'll see if they can actually execute on it. If they can, the investment will do well. And if all they were able to sign was these first ones that were just outliers, then I'm going to be the one holding the bag, right? But that's fine. That's what we sign up for. No, the future. But basically, it looks like people are starting to buy into the product. I did want to bring up Livongo. They were acquired, I want to say, for purchase value of Livongo at $18.5 billion. Teladoc paid 36 times next year's revenue for Livongo. So you might see $8 million revenue in 2020 for DRIO, currently trading at 400. It's not very attractive. It doesn't take much for DRIO to become attractive for a takeover target, right? And if they truly can execute, like they've already started hiring people ahead of time, which is what you want to see, because that means management truly believes in the product, and they've already started to sign contracts. That's another thing that I'm like, okay, this could actually work. So that's why I'm in now. I think it's a primary takeover candidate if it can actually execute and get these sales numbers and contracts signed. So the stock prices started to react favorably to the news, especially Livongo in the space kind of excited the space as well. That was quite the multiple, right? 36 times revenue. It's quite the thing to be taken out at. But that's the scalability of the product, right? But yeah, interesting. I'm in at 20, 21. I think I caught it while I was diving down here. They did just sign January 5th, 2021. So that's when they released that they signed one of the Fortune 500 companies. You know, on the conference call, they said they did too. We'll have to see what happens and how to start looking at the numbers. And then I can really actually dig into the numbers, because right now they're really almost, I know there is $8 million of revenue, but it feels almost like a pre-revenue company, right? But yeah, I mean, if you take what they said and you try to say what's likely at the end of 2021, you could see this thing going from 8 million to 30 million relatively easy, right? And that's almost like a 4x in revenue. And then it just keeps accelerating if the product is true, right? And they can keep attracting people. You could get these things to write a ridiculous amount, right? And even closing like 2% of the pipeline is probably enough to make the company look good on a year-over-year basis, right? So if they can execute on 10 to 20, like he's saying, that would be amazing. But if you can't, you don't necessarily need that for this investment to work. So ideally, that would be the nice, nice numbers to generate. But much more importantly, if they can do some of that execution, it means it would provide confidence to me that this strategy is actually working, right? Because right now it's still early and we haven't really seen the numbers yet from anything they've signed from big companies. So it'll be interesting to see what they can do. But yeah, for Q1, who knows? Like maybe you see like $5 million in revenue, right? And even that versus last year, I mean, they only did 8 million for a whole year. If they do 5 million in a quarter, they're still doing pretty good, right? And they said Q1 and Q2 are still the weakers of the Q3 and Q4 for this year, right? They're not as strong because it's back end heavy. We'll have to see what happens, or maybe the management's overpromising and I'm getting overexcited because of it. But this thing could easily, if it starts executing, could easily go up, right? Then you wouldn't need a Livongo multiple of whatever it is, 38 times revenue or something to get there. But yeah, I'd like to know your thoughts on this. I rambled on a little bit more than usual. But yeah, I wanted to really reiterate that it's not without its risks. I'm in it because I think it's starting to show results, and I want to get in before it starts showing the results of the numbers. So anyway, I'd like to know your thoughts, and have a great weekend.